Welcome to The Explainer. Today, we are diving into one of the biggest transformations happening in business right now. I'm talking about the massive global shift to mandatory electronic invoicing. So let's just start with this question, because it's something business and finance leaders all over the world are having to answer. And trust me, this isn't a hypothetical. This is happening right now, and it's changing everything about tax compliance. Okay, here's how we're going to break it all down. First, we'll get into the why. What's driving this revolution? Then, we'll look at the domino effect as it spreads across the globe. After that, we'll explore how different countries are tackling this, the quest for a common standard, and, most importantly, what it all means for you.
All right, first things first, let's really get into the why behind all this. What's the big idea that's fundamentally changing how governments and businesses deal with transactions?
You know, the really important thing to grasp here is that this isn't just a few countries tinkering with their tax codes. No, this is a coordinated, strategic push by governments everywhere to get real-time visibility into every single business transaction. And at the heart of it all, it's really about closing huge tax gaps. Governments are trying to bring in more revenue and, frankly, make it a lot harder for people to commit fraud with things like fake invoices. The goal is a system that's more transparent, fair for everyone, and, hey, it modernizes the entire tax administration process along the way. So once you understand that motivation, it's easy to see why this is spreading like wildfire. The sheer scale of this movement is staggering, and the deadlines, well, they're coming up a lot faster than you might think. Just take a look at how fast these dominoes are falling. You've got major economies like Germany, Poland, and France with hard deadlines in the next couple of years. And it's not just a European thing. Look at Nigeria, getting its largest taxpayers on board. See, once one country makes a move, it builds this incredible momentum for everyone else to follow suit. And we're not talking about a handful of places. The scale here is massive. We're looking at more than 30 countries with mandates that are either recent or coming up very soon. This is happening on every continent from Belgium and Brazil to Malaysia and the UAE. It's creating this incredibly complex global web of new rules.
Okay, so everyone wants the same thing, right? Digital tax compliance. But, and this is a big but, the way they're going about it, it's all over the map. Every country is carving out its own unique path, which creates this crazy patchwork of rules for multinational businesses to figure out.
Let's just take two examples to see how different this can get. You've got Kazakhstan, where starting in 2026, you'll literally have to prepay your VAT before you can even send an invoice. If the money isn't in the account, the system just blocks it. Then you have Ivory Coast, which is all about real-time validation using QR codes and digital seals to register every single invoice the second it's created. So let's just walk through that Ivory Coast system for a second. An invoice there isn't just a piece of paper or a PDF anymore. It's a fully secured digital transaction. It has to get a fiscal number in real time, have a digital seal embedded, and then generate a QR code. All of this so it can be instantly checked by the tax authority. And this is where it gets really technical, but it's so important to understand. In Germany, for instance, just saving a PDF of an invoice won't cut it anymore. For legal purposes, for an audit, the only thing that matters is the structured XML data file. I mean, that is a huge change for data management and how companies archive their records. So, with all these different systems popping up, you're probably thinking, this is a mess. How does a global company even begin to deal with this? Well, that's where the push for standardization comes in, this big effort to create a common language for e-invoices. One of the key players here is something called PEP-PAL. The easiest way to think about it is like a universal translator for invoices. It's a network that lets all these different accounting systems actually talk to each other across borders. Countries like Norway and Slovakia are already using it to make their lives a whole lot easier. And kind of building on that idea, you have EN 16931. This is basically a rulebook, a European standard that says this is what an electronic invoice should look like, and here's the data it has to have. By getting on board with this standard, which France is doing, it just makes doing business across borders so much smoother. And if you're wondering what's really lighting a fire under all of this in Europe, it's this thing called VITA, VAT in the digital age. This is the EU's big plan to modernize its entire VAT system, and it's what's really pushing this digital tax transformation into overdrive across all the member countries.
So we've covered the why, the who, and the how. Now, let's get down to brass tacks. Let's focus on the most important question of all. What does this actually mean for your business?
All right, here's a checklist, some real actionable things to think about. First, take a hard look at your tech. Can it connect to government platforms through an API? Next, you've got to update your archiving policies for these new rules, like the XML-only storage. And this is critical. You have to keep a close eye on the specific rules and timelines in every single country you do business in.
You know, the bottom line is really simple. This isn't some passing fad that businesses can just wait out. The momentum is undeniable, and as this quote makes clear, it is only picking up speed.
So let's leave you with this thought. This whole thing isn't just about invoices anymore. It's about your entire transaction process becoming visible to tax authorities live as it happens. So the real question isn't just whether your technology is ready, but whether your entire business strategy is ready for that level of transparency.